Before you buy a property in Dubai, stop. Because the biggest mistake foreign buyers make is assuming they qualify for the same mortgage terms as UAE residents. And that mistake could cost them tens of thousands of dollars or even make the entire purchase fall through. Today I'm going to be showing you the real mortgage rules for foreign buyers in 2026 and the right financing strategy to avoid expensive surprises. By the way, my name's Chris Channer and I help investors just like you every single week secure safe, profitable real estate in Dubai with full clarity on financing costs and long-term strategy. And if you're planning to buy property in Dubai off-plan already and want my personalized financing guidance, my phone number, booking link, and your free 2026 off-plan buyer's guide are all in the description below. Reach out anytime. I speak with foreign buyers just like you every week, and I'd love to help you too. Dubai's mortgage market is structured around loan-to-value ratios, residency status, ready versus off-plan purchases, and conventional versus Islamic finance. Most foreign buyers only discover the difference after they've committed to a property, which is too late. Today I'll be breaking down everything you need to know. This is where foreign buyers can get the biggest shock: loan-to-value. Foreign non-residents have a maximum loan-to-value of 50% for both ready and off-plan properties, meaning you pay at least 50% down payment unless it's an off-plan property, which you'll pay 50% during the construction period. This is dramatically different for resident mortgages, which I'll explain shortly. So what are the interest rates for foreign buyers? The average non-resident rate is 5.8%. Fixed rates typically range from 4.5 to 7.5%, and variable rates may start lower but carry adjustment risk. Foreign buyers pay more than residents because income verification is cross-border, international credit scoring is harder, and banks classify foreign buyers as higher risk. So what documentation do you require? Passport, proof of foreign residency, 12 to 24 months of international bank statements, proof of stable income, employment or business, international credit report, and self-employed non-residents must provide 2+ years of consistent profitability, audited statements, and business registration. So what's the best foreign buying strategy? Have 50% ready plus 7 to 8% for fees. Use international banks like HSBC, Standard Charter for smoother processing. Consider Islamic financing for long-term stability. Let's now talk about mortgages for UAE residents. This is where things come dramatically different and far easier. First, residents' loan-to-value advantages. Residents can borrow way more. If it's your first home under 5 million dirham, you can get up to 80% loan to value. Luxury homes above 5 million dirham are 70% loan to value. Investment or second homes, you can get 60% loan to value. Off-plan mortgages, 50 to 60% loan to value typically. This means residents need only 20% down payment for many homes compared to 50% for foreign buyers. Now let's talk about resident interest rates. The UAE national average is around 4.9%. Expat residents often qualify for around 5 to 5.5%. Lower rates, higher borrowing power, simple documentation. Resident documentation is far easier. Residents only need a passport, Emirates ID, UAE visa, a salary certificate, 6 to 12 months of UAE bank statements, and if you're a self-employed resident, you need to provide a trade license, audited accounts, and 2+ years of profitability. So the best strategy for residents, maximize 80% loan to value for your first home under 5 million dirham. Compare rates aggressively across multiple banks. Use developer payment plans for off-plan, then switch to a mortgage at handover. Non-residents can also do this too. So for foreign versus resident comparisons, max loan to value is up to 80% for residents versus 50% for non-residents. Down payment is 20% for residents versus 50% for non-residents. Although for a non-resident, you can pay this 50% over the construction period if it's an off-plan property and the payment plan allows you to. The average rate is 4.9% for residents versus 5.8% for non-residents. Documentation for residents, it's simple. For non-residents, it's a lot more complex. Bank choices, wider for residents and limited for non-residents. Strategy, maximize loan to value for residents versus prepare your capital for non-residents. This is the single biggest mortgage misunderstanding foreign buyers face. Now, mortgages for ready properties versus off-plan. First, let's talk about ready properties. The benefits are higher loan to value, up to 80% for residents and 50% for foreigners, immediate mortgage and immediate rental income. The risks, immediate debt and possible maintenance costs. Now, off-plan properties. The benefits, pay developer installments during the construction period. Remember, non-residents can also do this too. A mortgage is only required at handover. The typical structure of an off-plan payment plan would be 50% paid during construction and the remaining 50% due at handover, which can be mortgaged if needed. The risks, construction delays, and sometimes the final valuation can be lower than the purchase price. This means you must pay the difference. But the upside, lower entry prices and capital appreciation during the construction period. So the best financing strategy for foreign buyers: have 50% cash ready, use international banks, consider Islamic financing, choose ready property if you need a mortgage immediately, and use off-plan to avoid needing a mortgage until handover. For UAE residents, maximize loan to value, especially for first homes, shop rates aggressively, use off-plan to grow capital during construction, and prepare financially for valuation shortfalls. If you're planning to buy a property in Dubai, whether you're a foreign investor or a resident, I'd love to help you choose the right financial strategy. I help buyers just like you every single week understand mortgages, secure the best rates, and align financing with their long-term goals. You'll find my phone number, email, booking link, and your free 2026 off-plan buyer's guide all in the description below. Please feel free to reach out at any time. I'm here to help and support your next move. If this video helped you, please like, subscribe, and turn on notifications so you don't miss any of my future deep dives. Thank you for watching, and I'll see you in the next video.